Hello, everyone. Can everyone hear me okay? Get going here in just a sec. I know some of you guys are in the trading competition with Bookmap. Hopefully what we're going to go over today can help you in real time with that. Today we're going to get into speaking about, all the trading challenges we have out there, and we have a solution for those. It's called fact-based trading. Yeah, before I get into it, I just want to go over a disclaimer. Everything we're going over today is educational, so nothing that I go into today is going to be any trade recommendations. It's all, knowledge for you to improve your skill set. And if you are trading, recommend that you are only using risk capital. My name is John Slazas from Dharma Capital Trading. I've been involved in trading for over 35 years. I was a former member of the Chicago Mercantile Exchange. Basically, I'm from Chicago, grew up in around the exchange. This is my first job was to run around the exchange, and kind of haven't left. Really, I've got the need for speed, and started trading crypto in 2013. Really believe in the space. Big fan of distributed ledger technology and what it can do, and all about Web 3.0 there. But today we're going to get involved talking about trading and the challenges, and these day trading challenges are applicable to crypto, futures, equities, forex, whatever you're trading, and the solutions are the same. What's day trading? Every day is a new day. It's they say markets don't repeat themselves, but they rhyme. So these the conditions are always changing. Tactics are limited. You design these great trading tactics, and they work really well in certain conditions. In other conditions, they don't work well. In some conditions, you just get run over. And there's always that uncertainty out there. Those events that just come out of nowhere. So you have to be prepared for that. And you have to have a plan. And so, the challenge is, the solution is to align your expectations. And align those expectations with facts. To know what you know and what you do not know, that is true knowledge. And that is a great baseline. Being more aware of your blind spots. Understanding those facts. You get anchored on something at the start of the day. You do all this work, you put all this effort into analyzing the market, and you come out with a positive forecast, and then you get anchored on only seeing positive things, and you miss the truth. So focusing on the truth is what it's all about. Focusing on the facts. And when you focus on the facts and you align your expectations with the facts, you're taking that uncertainty and you're aligning it with something that's more predictable. What's more likely to happen? What's more likely to occur? And instead of having, a subjective view, is a specific bias, you remain objective. You stay in the present. You stay in the moment. You're not thinking what should happen. You know what should happen. You know what's more likely to occur. And it's a huge, huge piece. And in fact, whenever in my brain, when I have this thought, I think this, I immediately check myself. I need to know. If I'm thinking, then I haven't done a big enough fact check. I haven't really identified that foundation. And when you don't do that, and you are thinking, and you are working from subjectivity, and you're aligning your expectations with that hope. And hope is really aligning your expectations to what is not likely to occur. You get yourself into trade, you're stuck, your ego doesn't want to give it up, and you start hoping. You're like, well, the market broke out, but of this, or it produced this positive signal, and I'm short, but this one time it's not going to follow through. And anytime that occurs, you need to flip that and focus on what the evidence is. What are the facts? And align the expectations to what is more likely to occur, and then act. Make decisions based on that. And the pitfalls with hope and trading is it just distorts your reality. You end up holding on to losing positions because you have this unrealistic expectation. How many times do you sit down and pray that the market will, you'll have a one uptick? That's not based on facts. It's based on your ego. It's on your ego's desire to be right. And this can cloud your judgment. And being aware of those thoughts and emotions and biases is a great trigger to then go check the facts. Because the facts are that's your statistical baseline. That's your benchmark. That's what you check all your opinions against, and those biases and those emotions. Sometimes it's right to be fearful. Other times it's just the market's trying to shake you out. So fact-based trading, emphasize the reliance on evidence and market data, market truths. So you have clear, unbiased analysis that leads to confident decision making. Because your body, your ego's is in charge most of the time, and you need to get your body more involved, your subconscious, because your subconscious is when you can really perform intuitively. That's when you get into a state of flow, because you're not thinking, ego's not in charge, and your subconscious, your body knows when you don't have the right facts, and it causes anxiety. And when you do have facts, it's easier to get into that state of flow. And it's a huge benefit of fact-based trading. So the one way to, remove hope is to align your expectations with the facts. Stay focused on the current conditions and facts. What's the truth? Always search for the truth in anything. And then it's going to allow you to trust your instincts and act decisively. When you really have that solid base, it's going to give you the ability to act more decisively, which is going to turn into profits. So what we're talking about here is market state awareness. Being aware of the foundation, the truths of the foundation. And we break those down into basically 3 segments. We want to understand what the market state is. What's the condition? What's the context? Trending, not trending, extreme, pivotal, digestive, corrective, accelerating. We want to know the structure. And what market structure means is it's where those parameters, where the states will change. Markets are always transitioning from one state to the next. So what is the structure that state's going to persist? And where a break in that structure will signal that the market's in a transitional state. And if we are able to, we've understanding what the state is and what the structure is, that dynamic provides, natural strategies that are optimal for when the market's going to persist in that state, and hedge strategies when the market's going to transition. So at Dharma Capital Trading, with JS Analytics, we identify the state structure and strategy. And not just, trendy, non-trendy. We get into more detail. In this example, I'm showing a bull trend correction. So every trader is traded a bull trend correction. When you come in, but do you recognize that at the start of the period or the end of the period? And if you come in at the start of the period, you understand the market is in a bull trend corrective state. So understanding that fact foundation, what is the truth of that? It's a trending market that's either about to or is having a sharp pullback. So, those exhaustive, this is the expectation of a bull trend correction. We have a sharp corrective move. So understanding that, so we don't get caught up in emotional when the market's at its low point. We're more anxious to, if anything, to look to buy this thing to get on to the next extension higher. And so then when we identify the structure of that bull trend correction, we're able to identify those price points that define those extremes and where we want to participate. And so this becomes a risk management overlay. So no matter what you base your trading decisions off of in the heat of the moment, this is your underlying foundation, your underlying risk foundation. And because we're in this state and we have this structure, there's specific optimal strategies. So for a bull trend correction, a market that's, basically making higher moves, higher move highs, you're having this sharp corrective move to the low points of the last low of that underlying trend. Instead of, catching a falling knife in that situation, it's best to let the market exhaust for a moment. You get that capitulation and you get that reversal. And so, this would be an optimal strategy for this state and structure. So this is your fact foundation. And this is our application that presents that fact foundation. We call it our playbook. Literally, it's your guide for the trading period. Here's the factual baseline for each trading day. It gives you your market awareness. We identify the state of the market, and and these are all, all this work is all quantitative, and this is what you should strive for your own work. If you don't align yourself with an objective analytics group like Dharma Capital Trading, you want to really identify what is neutral. What does that mean? That's an expectation for a more sideways trade. It's balanced. Volatility is probably going to decrease. But it's also the precursor to a breakout. Markets digest, consolidate, and have a breakout. So you need to have a plan for both. So as you're coming into a market state that's in a digestive phase, absolutely we need to identify the structure of that digestive phase so we understand where are those extremes. Where would this market potentially break out? Observing price action. Is price action performing to the expectation of the state? Is it performing? Is it churning sideways and breaking structure left and right? Or is it holding structure? Those are all tells. And again, this playbook is just that. This could be sitting on your coffee table because any day, any market, any asset class is in a neutral digestive state and has this structure, then we're going to look for these strategies. It's an if-then statement. If this state and this structure, then these strategies. And so what are the best strategies for a market that's holding structure? Those are optimal. And what are the best strategies that are breaking structure? Those are hedge. So the key feature is that, this defines the technical state of the market. And what's the benefit of that? It's improving your awareness. It identifies key price levels. What's the benefit of that? It gives you this structure. It helps you to standardize your method. And it presents a strategy expectation. And so this is identifying what's most likely to occur. So let's get into a little decision matrix kind of in real time right now, breaking down, the fact focus of a market. The underlying, before we get into any, structure of a market, is just economic events, current events, what's happening in the world. Today is a important day. We've got FOMC coming out later this afternoon, so that's going to align our expectations to, as we, that's kind of the base foundation. We know that at 2 o'clock that the Fed's going to be coming out and speaking, and the market's going to react. The market gets, sometimes market's more geared up than not on these releases or economic events. I personally like to just look at the largest ones for major, potential events, and also on timing. So let's take a look at, we know that today's a FOMC day, so that sets the underlying context. I've got a couple charts here. I've got one that I'm looking more at daily. This is a 5-minute chart, and this is a 60-minute chart. So this is kind of my weekly outlook. And what I've done is I've segmented the previous week. Here's the current week. Here's the previous week, previous day, and current day. And so just kind of building on a fact foundation, get awareness. I always like to look at how's the price action performing to the time frame, the previous time period. So on a daily basis, this is the high of the previous day, the low of the previous day, the midpoint, and the closing price of the day. And this is the same for the week. So the high of the week, the low of the week, the close of the week. This is off a little bit there. And the midpoint. So just at a glance, with the fact focus, we've got the markets trading above last week's high. It's trading below yesterday's high. We're just above yesterday's close. So we've got a slight positive net change, and we're trading above last week's close. So now let's take a look at the playbook. So we're looking at Bitcoin, looking at the perpetual. Here's the playbook. This is what we call our market grid. All these tiles are color coded. So red hues are more negative bear trend. Blue hues are positive trend, bull trend. Brown is more neutral. The nice thing about the grid is if you have a tactic that you like to do, you like to fade momentum, search out markets that are non-trending. It's like a neutral non-trend is a non-trend state, but also a bear trend correction is a non-trend state too. It's markets correcting, that's going sideways. So you can align your tactics with the expectations of the state. So we're going to focus on Bitcoin. We're going to look at the Bitcoin perpetual. Let me just move this over here. So as we come into the trading period, understanding what a neutral digestive market state is. We were talking about this, we're expectations for a sideways environment with choppy trading conditions. Well, yeah, that's neutral digestion. We also have FOMC, which is going to, amplify that sidewaysness because until we get that news event. And that leads into this, which is we could have a breakout today, it is self-evident. But this also tells you that the context of the state is in alignment with a news event. And if we look at the start of the trading period, this is what's been happening. So this is the other thing we want to do is we want to observe is price action performing to expectation of a neutral digestion. And this is real key. Because if we come in, wherever we come in during the trading period, this is we're looking at daily structure. If we have a trend following system, we can't just come in, we don't want to just blindly come in and run it. The market is not showing it has the ability to trend today. It's performing like a neutral digestion. It's going sideways. So the next thing we want to take a look at, what's the structure of that state? So we've outlined some structure here where we know that previous day's high and previous day's low, and those are going to be natural boundaries for any state. Same with the close. Same with the midpoint of that range. But with our, now we're going to add some market structure to it, and where are the boundaries of this neutral digestion? So we call this our critical range. So you've got an upside pivot and a downside pivot. This number down here, this green line, is sentiment bias. So market's positive above that price, negative below it. That's always a good thing to take a look at from the get-go, is just, where's sentiment? So sentiment below the market, is more of a buy-break situation versus above the market. It's more of a sell strength. And if it's, kind of balanced in the middle, it's telling you that the market's pivotal. So in this instance, we're in this neutral digestive market state, and structurally we've got sentiment below the market, which is telling us we have a positive bias. And we know that our lower extremes are down here for Bitcoin at 26,714, and really this whole price band down here. So if we do get some big volatility off the figure, how low can it go? Market can go down to 26,501. Where can it go to the upside? 27,565. And that's also the previous day's high. We also have some other structural numbers that give us some insight to how the market's performing within this structure. Call those minor levels. And a lot of times when your market's trading within what we call this critical range, and the expectation in neutral digestion is we could really narrow that range. A lot of times it'll narrow within these interior levels, like it's doing here. So when you know for a fact FOMC is coming out in the afternoon, you know for a fact that the market's in a neutral digestive state, it makes, as the market's pushing higher early at the start of the session, as it's coming up to this price level, 27,342. The expectation is, is this thing ready to run and break out? Well, we have FOMC tomorrow, probably not. Are we going to exhaust here? Well, we're more likely going to exhaust here or here and digest. So if we exhausting here, where should it go? It should go to the opposite side, kind of a symmetrical shift. And so you have this rotation, within these boundaries here, which is just coiling before a figure. But this structure helps you to define what's more likely to occur. If you're selling the market here based on one of your systems is selling it here, this is telling you that you might have an issue with that sale. If you have a system that's fading this move, this helps to identify here's where above this metric boundary would be a good place for a stop. And so we know the state, we know the structure. What are the optimal things to do? Well, optimal things to do are, to either fade momentum against this structure here, the high point, or what's even more interesting is if we get an opportunity to buy this break. Either fading momentum into the sentiment or accepting what we call a reversal, where the expectation is to have the market go below this figure, which would also be below yesterday's low point, suck everybody in, and then you get one of those kind of V bounces that qualifies above here to give a reversal signal. End of the day, it's still neutral digestive, so we're not expecting a lot of follow through, and the market's performing like it doesn't want to follow through. So either a push to the upside or a push to the downside in this state and structure is more likely not to follow through. So we have our big foundation. We have our market state awareness. We can also do this for fun. Here's the structure for the week. Which is a little different than the day. And we have the microstructure. So we kind of have a bigger picture to the microstructure. And for our decision matrix, as we're going through and we've established our fact foundation of neutral digestion, sentiment below the market, so it's more leaning on positive buy dips than sell rallies. What's more likely to occur? It's more likely we'd get an upside breakout than a downside breakout with sentiment below the market. Is the market performing to the characteristics of the state? Yes, it's not trending. It's having issues trending. Is the market holding structure? So far it is. It's digesting within the critical range. Is there a strategy theme in play? No, there's not. Our strategy themes are all occurring on the outer perimeters of the critical range, and currently the market is just rotating within those parameters. So we're rotating within here. So it's a bit of a mess. It's a tough trade. It's difficult to make money. That's where these fade opportunities come into play in neutral digestion. You do get, we call this the price movement between segments. So this is a full segment move. This would be a half segment move. And then this would be two segments. So you have a, half segment move. Basically what this structure also does, it just gives you insight into, the expectation of your targets. What's the market paying out? What's the movement? And so here's the expectation that you have a half segment move, a full segment move, half segment move, half, and we're on our way to potentially another full segment move. So, it just identifies, if you're getting into an opportunity here and you have to risk this, your minimum expectations. We're going to see a half segment move. Is it worth it? Yes, it is. If you start to get involved outside these metric boundaries, it starts to be more expensive. And so this is, kind of, that's your risk management overlay. So we've got no strategy theme that's in play. This tool, this part of the analytics is what we call our price map. And we have it integrated into Bookmap in the Cloud Notes section, as well as other charting platforms. And as we go through our fact focus and our decision matrix, this is, we have our foundation, neutral digestion. We know sentiments below the market, so it's neutral, but with more of a positive lean. Is the market performing? Every day this is what you do as a trader. Is the market performing to the expectation of the state? Period. Is it holding structure? If it is, yes, it is. Then we want to look to participate in the optimal strategy themes. So currently the market's holding structure. We're fading moves in Bitcoin. If the market wasn't, if the market is performing to a transitional expectation, it's breaking structure, then we're going to look to participate in the hedge strategy themes. So it's really straightforward. You don't really have to think a lot. Which we've talked about. We don't want to think. We want to perform. We want to act. We want to trade in the flow. We want to get in sync with what is more likely to occur and execute. That's what we want to do when we're trading. We don't want to think. We want to know what's true, and we want to act. So if the market's per holding structure, which it is, trading right now is dangerous because we're trading. It's in the middle. Are there things to do? Definitely. Are they more aggressive? Yes. Should we trade small? Yes. When market gets to the optimal themes, these are the trading opportunities that we want to trade bigger at, because the market's in alignment. It's at structure. In the middle, this is where the HFTs live, and they're going to chew you up. Where the market's transition from one state to the next, this is where the funds participate. This is where there's more liquidity. And since we're holding state and we're in line with structure, this is going to be the optimal thing to do. Or this, fade momentum into the extremes with more of a lean to the upside. So buying dips is more favorable than selling rallies, only because sentiment is below the market.
Hey John, this is Bruce.
Hey Bruce.
Hey, how are you doing?
Good.
I just thought I'd check in here since this week we're doing all, well, not this week, we just started today, this morning, East Coast time at 8 a.m. and then it finishes Friday is this competition on crypto Bitcoin trading competition.
Awesome.
And sorry, I was in a meeting and I wanted to be there in the very beginning here, but I missed it. Just jumping in now. I don't know, did you sign up for the competition?
I did not. I wasn't sure I was going to be in town this week.
Okay. So I missed. I don't know what you were talking about the structure there. I just saw like fading the tops and buying the bottoms basically.
Well, yeah, we're just getting into talking about decision matrix on aligning your expectations, really. So traders, they get into a situation and they align their expectations a lot of times with hope. They get into a trade and they're hoping that the market's breaking their structure and their ego's trying to keep them in their position, and they're saying to themselves, this one time this breakout's not going to work. And they're talking themselves into their position. They're just hoping, and they end up taking bigger losses. Versus aligning your expectations with the facts and knowing that, okay, market's breaking structure, I need to act, I need to get out. So you end up taking, you might take a lot of little losses. The market may have come back and then ended up you would have made money, but at the end of the day, more times than not, you're taking a loss versus taking a scratch. And and then when you are aligned with the expectations of the state and structure, when you do hit it, you hit it big. And so instead of making back losses, you're actually at new equity highs. Because you're kind of treading water, boom, treading water, boom, versus taking a loss, setback, rally, and you're kind of breaking even. And so by aligning your expectations with facts, it sets up that that's kind of your foundation. You're always in line with what's more likely to occur. And so that's what we're getting into, and just now we're just talking about the decision matrix of kind of going through the motions, looking what you need to look at, looking at the integrations with the playbook and Bookmap, and focusing. We're getting to talk about kind of the microstructure now of that decision matrix.
Yeah. Okay. Well, what did you see in Bookmap? I saw the overall structure, but did you? What do you see?
Yeah, I was just showing here right now is kind of the big picture. This is kind of the weekly to the daily, and now into the microstructure. And so today we've got FOMC. It's pretty much a waiting game. Based on the bigger picture, you're basically right here is the net change for the day. And the market currently is above the VWAP, and we have some buyers here and some liquidity building up. Looking, like the market wants to make a positive push. So we're looking for this liquidity to start to build up. We have some imbalance here that we could see. A move, and we've got liquidity that's building up here that's in alignment with the upper structure. So right now it's pretty thin. You can just. And that's what I mentioned before. It's a bit of a dangerous trade at the moment. But this is using this structure and having this structure right at your eyeballs within the heat map can give you some insight of where are those exhaustive moves going to happen. So currently the market's trying to rotate back up, but we already basically had our consolidation. We're just kind of zeroing in on 2 o'clock here. We got another hour and 20 minutes or so before Powell's going to speak. So.
Yeah. Okay. So you're just kind of hanging tight right now.
Yeah. No, it's just the biggest thing that I just wanted to go over today with the FOMC is how do you align your expectations? What's going through your head when you've got your trade on, and as you set you start from the bigger picture and you go into the microstructure. Here's where you're at in the moment, and these are your facts at the moment. And so, these are the real time facts that can really help to anticipate, can help you with your size management. Where your risk is at. Is the current liquidity in the marketplace in alignment with what you want to do? Is it helping you tell you now's the time, or do I want to just wait for the order book to realign in my favor?
Yeah. So I just want to just for the competition and you've been, I don't know how long you've been trading. You've been trading futures for like 30 years or something.
Yeah, over 35 years.
And it doesn't date you either because you started really young.
I did.
I think I asked you this before, but like these markets in crypto, they trade very differently. Each market trades, all markets trades the same way basically, but like it's an auction and there's there's orders and people and supply and demand. This is how it works, and this is why order flow works so well. However, crypto, does things that other markets do less so, like huge spikes above ranges and then moves right back in. I don't know. Other kind of nuances that maybe this would help some of the people in the competition. Some things that you kind of note that around some of your levels that are important.
Yeah, sure. No, I mean that's a huge piece, Bruce. You know, absolutely. People that that don't understand crypto and are naive to it. I've been, like I mentioned before, I've been trading crypto since 2013. Um, and I started out in the futures. You know, on the trading floor in the 80s. And I learned from all the top traders on the floors. And yeah, I lived in the Merc library, and what did I have? I had technical analysis, so I was in there all hours and hours every day, learning, and I learned all the different technical analytical tools. And the markets changed, and in the 90s, and they really started to go more quantitative, and a lot of the big players, they don't really care about that. It's and a lot of people that still believe that you can apply a lot of these things intraday, and you really can't. And especially with crypto, crypto trades more like a seismograph. So you absolutely those markets will go to the extremes immediately, and they'll stop. Just looking at our structure here, you can just see it. It goes to the extreme, it stops, and just goes to the next extreme. And you get a lot of you get a lot of noise. Here's the same situation. The market breaks out here. Where's the risk? The risk here. Where does it go? It goes right to it. And so you have to be, you really have to be prepared in crypto. You need to have an exit plan. I'm not a big believer in break-even stops. I'm a big believer in taking money off the table. So when the market's coming up, it should follow through. Then it better go. And as soon as you get that trigger, you better be jamming up your profit give back trail real tight, because they do this all the time. They'll make.
It's wicked. I mean, these are wicked moves out of the blue like that. I mean, it's like gold or something like that. Just something really volatile but worse so from what I've seen.
Yeah, and then it's even worse when you trade, on the specific exchanges. I trade OTC, and I recommend anyone that's trading crypto should have an OTC account. The individual exchanges, you got to remember, there's only so many market makers that are on those exchanges, and some of these exchanges have their own market makers on there. So you basically have the exchange trading against you too. And they, and when you get in there, there's all these algos that are playing games with you on your order. You put a resting order there, they're just going to game you and move the bid, the offer a little bit farther away, so then you end up paying up, and then immediately it switches back. And there's just less participants in all these different exchanges. Then the good, what Bookmap does a great job with, having the consolidated order book, so you can actually see what the consolidated orders are for over multiple exchanges, so you get a better idea of where liquidity is. And then, which is great, which is fantastic insight, because without it, you're just getting the liquidity of, one, just a handful of market makers.
There was a comment that I hadn't looked into some of the exchanges you had with crypto, and it was rather funny. You said, "Oh yeah, look at Hobie." There's like one market making algo there, and you knew it really well. It was like, okay, if I want to trade that, that's what's going on over there. But like you said, you can see some of these algos working, and have a good idea kind of what's going on in these markets with by seeing it here in Bookmap, in my opinion.
Yeah, no, definitely. And that it helps you to, combining the longer term structure with the microstructure, that allows you to anticipate where you want to act. So you can take advantage of other traders that are just blowing out. That's basically what's happening at these extremes. Is the market is exhausting and it's blowing out. understanding that we've got a liquidity building up here on the upside. If Powell comes out and says something and Bitcoin gets all excited, well, we already know, based on just the decision makers that we've gone through. Hey, it's yesterday's high point. We've got the structure point is at the high point of the neutral digestions, and we've got liquidity building up here. There's and it's building up in front of the figure. This is how I like to use, especially on the liquidity and resting paper, to help me identify. Okay, well, I know if I've got some size building up here over multiple exchanges, that's telling me that this area is more important than here. So if I want to get something off, I'm going to need to get in front of this.
Right.
And the same thing for stops. A lot of times the liquidity will build up, maybe through the figure. And so that'll give me, it also gives you confidence too, because I know this is the figure, but I have this backstop of liquidity. Let's say if it was building up here, that it's more likely it's going to take me out. So if it is taking me out, I'm not freaking out about it. I'm like, I'm expected. The market wants to go gravitate towards that liquidity. And then and then it also gives me more of a sense of where should I put my stop. So
in a situation like that though, where would you have gotten in?
On this, if I'm looking, so based off.
No, because you're looking for that as where it might go. But would you already be in, or you're waiting for it to go up there and then short it?
So for me, I like to go for the biggest bang for the buck. So I want to risk the least and make the most, and trade as big as I can at those opportunities. So I'm not so interested in. I'm not such a junkie that I have to be doing something all the time. Most of the time, I have some kind of position, but so based on the current structure of the market and based on the market state, I know we're in neutral. I know that with this type of structure, I know the opportunities are at the extremes. So that's really what I want to save my money. This is where I want to spend my money. I want to spend my money on these opportunities. So I want to wait, and I know that So I know this is an opportunity, and the market is. I know that the market's starting to is firming up here. So that opportunity might come into play. And so how do I want to play this? How do I want to position myself for this? If I'm buying the market here, what do I have to risk? Well, I have to risk below here. And what am I looking to make? Well, before Powell comes out, the market's already told me that this structure is good and this structure is good. So if I buy it here, I know I have to risk this, and I'm only making this. And 1 to 1, 1.5 to 1 isn't interesting to me. I want to get myself into at least 1 to 3s. Risk 1 to make 3. So what Bookmap helps me do here, it tells me, there's the momentum's building up. I better be prepared if he comes out and speaks and it's going to accelerate. I might want to start working into my trade a little earlier because I've got this resting paper here. I also may not want to risk too much because I have the liquidity building up in front of the figure. So typically, and I know, based on the fact foundation, neutral digestion, what does that mean? Well, it means things should consolidate. It means things should narrow. It means that if the market does rally here and I'm looking to fade that momentum, this figure should hold. And if this figure doesn't hold, that tells me something else. That tells me maybe we're breaking structure. Maybe we're breaking out of this neutral digestion. So the expectation anyways is that this rally is going to fade somewhere in front of here, and based on this liquidity, it might just fade here. And since this is yesterday's high, maybe we're only going to take it out by a tick. Maybe we're just going to stall here, and that's all we're going to get on any kind of surge. So I'm more, right now I'm more looking at, okay, how do I want to position myself for an opportunity?
Yeah. Okay. I see. Yeah. Well, you certainly nailed your zone earlier today, huh?
Yeah, no, and that's why I was getting into the presentation. It's like observing price action within structure, and is it performing to the expectations of the state? And here's what, and you can see here's how you use Bookmap too. So you've got we know we're neutral digestion. We're not expecting the market to go anywhere. We know that the markets, when they are digesting, they're gonna, they want to tighten the coil. Like I said, I want to fade in front of this. So I'm winding up here. So maybe the coil's already been tightened, and if we do get up here, we're going to break out. What's interesting at these extremes is this, these, you can see these volume dots. You see the market got all excited here in front of the figure. So I definitely like to look at those opportunities when the market is people are puking out of their trades in front of structure. So these are kind of good highlights for me to look for, that the market, you get some big exhaustive orders coming into structure versus I'm getting those big orders through structure, because then that's going to give more validity to those dots, these volume dots here that are coming in.
Right. So in that case there, those volume dots there, like you're looking at that as puking or potentially trap volume.
Yeah, these people are they're getting squeezed out. It's a thin trade, and it was a thin trade too, right? So you got this spike into here. The market is this volume dot here. It's happening in front of this figure. Plus, it's kept coming right into the previous day's close. These guys immediately turn. They caught some of that, but then they keep selling it and they're pressing it to the downside, and they're pressing it right into structure.
Right.
So having buying above here like this is giving me insight that, okay, we already we pushed higher in the day, we couldn't follow through. We pushed lower in the day, we couldn't follow through. We're digesting. Now we retested the close, and now we're getting some buying here. And you can see the order book starting to shift up. The market looks like it is leaning for a positive push, which like we talked about earlier, which is in alignment with sentiment. So it's more of a buy break bias in Bitcoin. Is this all we're going to get to the downside? We're going to make a push up to here. That's what's happening currently, and we've got the event economic news coming out, and you can see the order book starting to push that up.
Right. So how much data do you have there in Bookmap? You got 1 to 7, so that's 6 hours there. So you got like I don't know, 15 hours or something.
Yeah. So it aligns back to here.
Yeah. Okay. Yeah, well, here we go. Let's see if we get to move back up to these highs. If you look at your yellow structure there, so is this something like I've noticed in Bitcoin again and again? I mean, it really bashes on one side of kind of a structural area, and then it will go all the way to the other side, and then also spike above that, and then go back in to the range. So in this case here, you see this structure as being bullish because it's gone through into the yellow, it's retested below the yellow, it's back up above it, and it kind of like built and coiled up there a little bit. At your kind of 27 119 line there, and then but it's above it though.
Yeah, no, that's exactly what aligning your expectations is what the whole presentation is about, and we're observing price action within structure in the context of the state. So we know so when you're coming in here, is the market going to perform to expectation and go sideways, or are we going to trend and break out? So you have this move here, and this is all, this is exciting, like, oh my gosh, we're going to break out to the upside. No, we're not, and we fail, and now we rotate back through the directional, and then okay, now we're going to start trending. We're going to at least make a play for sentiment. No, we're not. But we hold this extreme here, and we hold below the previous day's close. So this could just be a normal, wave extension here, and now we're going to have this lower wave extension. And so and what's also important about this high here is it held this metric boundary. So it's telling us that this directional level is important. Then we get below the midpoint, that's -2, but now we can't take out that low. And then we come above here. So this is the positive signal. And this is the squeeze. So the market told us here, first it comes out in the morning and says we're going higher. And this is all just noise to get us back to where we are right now. So, and here was another tell where they held this. This is a clear signal that this market, if it's going to build negative structure, lower lows, lower highs, this is a great price point, and the market needs to take out those lows, and it couldn't do it. And so now when we shift back to here, now we're building positive structure. And we're this is your net change. This is a classic crypto squeeze play, because if you're buying this breakout, where's your risk? It's here, below the midpoint and below this metric. Then they hold that perfectly. And so then when they're getting back up here, this is more another additional insight that, hey, the market wants to go higher. And where's the risk? Well, the ultimate risk is here, but we've got this positive price structure. It really shouldn't trade back below, here. And if it goes below here, we know that this thing's over. But we're in the middle of a FOMC, and and we're still basically it's just all noise in this consolidation within this this interior of the critical range. So that's why it's like when if we get some event and we get a move down to this area, or we get a move up to this area, that's when it really gets interesting, because that's going to be the tell that are we going to hold the structure of this neutral digestive state, or are we going to break structure? And I like this play too, because right now it's just all noise, but I like the VWAP as just a good barometer. And whenever the VWAP gets in alignment with a good structure point, like this 27,119 area, those are always great areas of confluence.
Yeah. So the VWAP. So you look at just any anchored VWAPs, or are you just looking at the regular VWAP for the day?
Just the regular VWAP for the day.
Yeah.
I mean, I like regular VWAP for the day and the previous day's close. They're great, are great tools. I mean, this is just, that's, I'm all about fact-based trading, focus on the facts. If the market's higher or lower on the day, if the market's above the previous day's high, that tells you something. Do you really want to be short? If it's below the previous day's low, do you really want to be long? Those are just kind of real simple, basic things that most traders don't even look at. They're looking at some other, something that's happened intraday, and bottom line, are they above the midpoint of the day or below the midpoint of the day? That's what's interesting to me.
Right. Okay. All right. Well, I don't have any other questions. Let me check over here in YouTube. I don't see any other questions for you. Fed Watch. Well, okay, that data is out now. So, what was the decision here? Oh, okay. So, yeah, hold on.
Yeah, I mean, bottom line is, aligning your expectations. Take your profits sooner today. Don't have an expectation of follow through today. The market's not showing it wants to trend. Could we have a big spike move? Yes. Is it more likely a fade? Yes.
Yeah. So yeah, interest rates are the same, and we got our projections though, and our statement, and then we'll have the press conference here in another 25 minutes or so. So we got a long way to go.
Yeah. No, it's a tough day. So again, for me personally, I like to wait for the market to be in alignment at extremes, and I like to align the higher time frames with the lower time frames, and then use the microstructure to help me get my position on and help manage it. In the decision time. When I'm right here, it also helps me to with my risk management. So understanding that where the liquidity is in the marketplace, how tight do I want to have my stop, where do I want to get out, where do I want my orders to get in or to get out, based on liquidity in the marketplace. Is it ready? When the market breaks out, do I get the liquidity to support it, or is it just is it too soon, and I don't have it.
Right. Okay. Well, good stuff, John. As
Thanks,
always,
Bruce.
I mean, very sound, methodical reasoning and process here, and looking for alignment, and then looking for taking your position.
Yeah, you keep it when you keep it into more of when you focus on the facts and you focus on what's true, and you break things into a more of an if-then situation. It's more calming. You don't have this what if, what that. I'm hoping this. You have a better understanding of what things mean. I mean, that's why I'm a big fan of our work, and I put years of development into this methodology of just the state, understand the state foundation, the structure of that state, what strategy themes, then observing price action within structure to understand, are we performing to expectation or not? If we are, then that's your story and you're sticking to it. You don't need to think about what's happening, because the market's telling you what it's doing. It's telling we're going sideways. We're in neutral. We're going sideways. And we're coiling and digesting. And these are the extremes that are really going to validate any kind of breakout. So until that happens, sell vol. Sell if you get a volatility spike into an extreme, we're going to fade it. Trying to. And then the backdrop today is you've got the FOMC to deal with. So once that shakes out, observing that the price action within structure is going to give you better insight, and then you use the microstructure to manage your trade.
Yeah. No, and it's always I've enjoyed it for years, John. Really good stuff.
Well, I love your. I mean, the Bookmaps. I mean, I don't understand how people can trade without Bookmap. To tell you the truth, I mean, to me, I was never a guy who just could watch the dome and get into that flow, because it was too microstructure. I don't really believe in scalping. I traded in the pit, so I know what scalping is. And then now if you try to compete with machines on the scalping aspect, forget about it. Doesn't make any sense. It hasn't made sense for years. And so without this visual, and to be able to see all the activity in the order book going on, it's I told you guys this from day one. You guys, every system is going to, every order book is going to look like this, because you just need this information.
Yeah. No, I mean, that's the nice thing about it. We've had we've got a few dome traders that go through basically, I mean, very similar to the exact same thing, except on the dome. We've just taken the liquidity and placed it on the chart historically.
Yeah. Otherwise you're remembering it. This way you can plug right in.
Right, exactly. And that's the beauty here. It's funny. Like I remember when you first started doing events with us. Like, I don't know what year that was, 2016 or 17, something like that. You were like, I can't believe this is legal.
Well, I think that's how you developed it, off of high frequency trading, hedge fund, right? So, basically all the funds, that's what I'm saying. People don't really understand that high frequency trading has had this technology for a long time, and you guys brought it, to the average trader that doesn't have this, that infrastructure to create this. And so and the high frequency guys are actually even looking at even, such smaller microstructure. They're down to the, microseconds, and they're monitoring that. The machines are monitoring that, as your orders are going in. I mean, it's just kind of crazy. It's like the Flash. They slow it. They slow down the world, and they put their orders in front. And I think a lot of people don't really understand that the high frequency trading is super small size too, and it's designed to pick off a lot of small opportunities. That's why understanding where the big structure is, this is where the real liquidity is coming into the market. This is where the fund managers are really coming in and making decisions. They're not doing stuff here, which is where all the algos are happening.
Right. Yeah, exactly. It's great stuff, John. And I don't know if you want to, stop by, and I'll reach out to you afterwards, but maybe stop by the crypto room and for the competition, or maybe even join tomorrow on an event with us. Anything if you want to get involved.
Okay.
I'll fill you in more. I don't know if you're just finishing up your presentation or if you still have more to talk about.
Yeah, no, we pretty much covered it. So I'll probably just wrap it up, just and then then I'll check out the competition.
Okay. Yeah. I'll reach out to you just after this and chat with you.
Sounds good.
Okay.
Thanks for stopping in, Bruce.
All right. Yeah. Thanks, John.
Well, that was nice. Bookmap guys are great. It's such a special product. I definitely highly recommend it. Just going back to presentations, talking about aligning your expectations with facts. Part of that process, identifying, is the market performing to expectation? Then we shouldn't expect it to do otherwise. If the market is breaking structure and not performing to expectation, something's up, and we shouldn't hope that expectation is going to continue. We need to change our tactics. And if the market can't hold as the state structure and it breaks structure for the hedge theme as well, it's a tell that the market's going to do nothing. It's a tell that you're going to have one of those terrible non-event days, and it's a tell that don't trade, go find something else to do, or just sell vol. Because that's really what you come in and do every day, is you identify, is the market performing to expectation of the state? Is it breaking the structure and transitioning, or is it not able to do either? Those are the tells that say, hey, we're going sideways. And having the playbook, having the price map structure, it's going to allow you to standardize your entries. Stay away from the middle where the algos are going to eat you up. It's understanding the structure is going to standardize your trade selection, so you're in alignment with what's more likely to occur. And by doing that, you can standardize your size management. Where you want to spend your money, where you want to put your capital at risk. You can't make money trading the same size. You have to trade bigger when the odds are in your favor, and trade smaller when they're not. When you have big opportunities, you need to go big, and you need to force yourself to go big. And when you're fading what's more likely to occur, you need to force yourself to deleverage. That's an easy thing to do too. When you find yourself in a situation where you're building up anxiety, and you start to notice things that aren't really as they should be and in alignment, just deleverage. With crypto, it's easy. And that's the beauty of crypto. You can trade microsize. Just start selling if you're long, and the market's starting to break structure. Just sell a little bit. You can always put it back on. When the market realigns in your favor. But deleverage. I do that all the time. Trying to get into a big opportunity. A lot of times you're getting squeezed. You know what? I'll just deleverage. I'll keep a smaller position, and then if things start to realign in my favor, I'll jump back in. And if they don't, then I'm out. But I already started to get out of some, and I'm not stuck if there is an event and things just liquidity just vaporizes and there's nothing there. I'm already starting to, anticipate that the things aren't performing to the expectation, so I need to start to lighten up. With our work, we have our metrics, and you can really optimize your tactics, working within those metrics. But it's all about having a fact focus. And, we have the tools to provide that. This is a weapon. You can align your tactics with states. You can immediately get to the markets that have it. If you're just focused on one market, it's in line. It gives you that quantitative baseline to align your expectations with. The structure is giving you not only the structure of the context of the state, but also the sentiment. Where there's that sentiment bias of that state, and that structure is going to identify where do you want to spend your money. These are the big trades. This is where if you're looking at size management units of 1 to 3, anywhere not at structure is a 1. Anywhere at structure is a 2. And anywhere at sentiment is a 3. It's that simple, because the sentiment bias is the one line in the sand for that trade period of positive above, negative below. So it's always where all the liquidity, most of the liquidity of the day is going to come in at that price point, if it happens. At least the fund guys are going to come in and trade there. Otherwise, it's the structure points. And in the middle, it's if you have to do something, or if you're trading off of a minor structure. And the strategy themes are going to help to identify, what's the bigger picture, what's happening. If we're in neutral digestion, yeah, you want to wait till the market's at an extreme. Is there opportunity for transitional moves? Yes. What's the issue? It's hard to define your risk, so you need to trade smaller. And when the market does break structure, these, it should just fall through right away. These are both breakout strategies in a hedge strategy theme for a neutral digestion. And so the market should just go. It should hold price structure to the upside or to the downside and just go. And if it doesn't, that's a tell that that this market's going to fall into a non-event trade, and it's going to go sideways, and it's going to be terrible. So that's another part of understanding the foundation of the state and how it transitions. And so that way, if it's not performing to the state, it gives you better awareness to how do you want to adjust your position. And then having this integration built into Bookmap in the so you have the microstructure view, and then you also have additional integrations to give you the bigger view. It really, all of a sudden you have more clarity, and you have the bigger picture clarity of what's more likely to occur, and then you have the microstructure of what's occurring currently, and then you're acting. You know what's more likely to occur, and you're acting on it. You're not hoping for something to occur, or you're not reacting and waiting for something, waiting for a signal. You're anticipating opportunity. So if you'd like to test drive some of these tools, come to dharmacapital.trade. Feel free to email me directly if you have any questions at js@dharmacapital.trade. And we will see you next week. Enjoy your day. Cheers.